What is going on, everyone? It is the Naughty Investor here, coming at you with another video. So some big news today in the crypto industry. Be sure to stay tuned till the end, hit that subscribe button, leave a like, because this is a big video. We have Morgan Stanley saying cryptocurrencies are now an institutional asset class. Institutional investors are increasingly getting involved in Bitcoin and other cryptocurrencies, while the number of retail investors in the space is staying stagnant, according to a new report by Morgan Stanley. In an update to Bitcoin Decrypted, a brief teach-in and implications, the global banking giant's research division delved into the last 6 months of Bitcoin and highlighted certain trends it noticed. The report is dated for October 31st, so this is very recent. Perhaps most notable, the report emphasized its writers' views of the market, quote, rapidly morphing thesis, which began by defining Bitcoin as digital cash and noting that investors had full confidence in it, to a solution for issues in the financial system, to a new payment system, to ultimately a new institutional asset class. Various issues and discoveries around the Bitcoin ecosystem have caused the thesis to evolve, including the permanent ledger recording all transactions, a number of hacks, hard forks, new technologies which are cheaper than Bitcoin, market volatility, and other concerns, the report explains. As such, the market's current thesis appears to be that Bitcoin is a, quote, new institutional investment class and has been for almost a year, the author wrote. The amount of crypto assets under management has been increasing since January of 2016, with $7.11 billion US currently being stored by hedge funds, venture capital firms, and private equity firms. The fact that major financial institutions are increasingly getting involved supports this thesis, the report continued, citing Fidelity's new crypto services division, investments in SeedCX, BitGo, and Binance, regulatory approval, and Coinbase's recent fundraising round. That being said, the report did cite 3 issues clients had with investing in the cryptocurrency space. Regulatory uncertainty, which that is going to be solved over time, a lack of regulated custodian solutions, which is already being solved, and a current lack of large financial institutions in the space, which is starting to be solved. Stablecoin trading. The report also dived into a popular topic as of late, stablecoins, or types of cryptocurrencies that seek to enable some form of price stability. Bitcoin is moving increasingly towards trading versus the stablecoin USD Tether. Half of all current Bitcoin trading is now against another digital asset, continuing a trend which began last year. The fact that many crypto exchanges do not accept fiat currencies contributed to the state of this affair, the report's author said. They went on to explain. USDT, which is Tether, took an increasing share of Bitcoin trading volume as cryptocurrency prices started falling. This occurred because many exchanges only trade crypto to crypto and not crypto to fiat. Trading crypto to fiat requires going through the banking sector, which charges a higher fee. Also, as Bitcoin prices fell, so did most all other coins, so if owners wanted to come out of the Bitcoin holdings, they needed to go into another asset which was closer to the variation of the US dollar. Crypto startups are now hopping on the trend, with exchanges and other companies developing their own stable coins as part of the next wave of development. That being said, the researchers do not see all stable coins surviving. Only those with the lowest transaction costs, highest liquidity, and defined regulatory structure are likely to see increased adoption. So guys, awesome news today. We have Morgan freaking Stanley, coming out and saying cryptocurrencies are a new institutional asset class. Now look, they did highlight 3 issues, but as I explained briefly, these 3 issues that they kind of pointed to, 2 of them are already beginning to get solved. So we are seeing tremendous progress within the cryptocurrency world. It's only a matter of time before prices catch up. Next up, we have Binance. Signs up 40,000 crypto traders in its first week in Uganda. Despite the global market, demand for cryptocurrency appears to be booming across Uganda, a country where nearly 3 out of 4 people don't have bank accounts. Revealed exclusively to CoinDesk, Binance Uganda signed up 40,000 users in its first week since the world's largest cryptocurrency launched its local subsidiary in October. The early results suggest a strong appetite among unbanked Ugandans for purchasing Bitcoin or Ether, the two coins the new Binance unit currently lists. According to a paper by Stanford University researchers recently published in the American Economic Journal, 74% of Uganda households are unbanked. As such, Binance's chief financial officer told CoinDesk, quote, "They just have to have money within the mobile payment system. They don't have to have bank accounts." Aside from the local focus, the effort differs from Binance's flagship global trading platform in at least 2 other notable ways. While Binance only offers trading for cryptos for other cryptos, its new unit in Uganda is partnering with a local mobile payment provider that will convert fiat to crypto or vice versa. The partner didn't want to be named. Like its Malta-based parent, Binance Uganda has no bank account. Quote, "One of the major issues in the region, in the continent right now, is liquidity, and Binance will bring us liquidity. These digital assets can move borderless around the continent." Further, the prospective Ugandan users are still undergoing the KYC onboarding process, verifying their government-issued IDs. Binance was historically known for only requiring an email to trade crypto to crypto. Previously, Ugandans who wanted to trade crypto were most reliant on P2P exchanges like local Bitcoins or nearby services such as the exchange Golix. However, chairman of the Uganda Blockchain Association and co-founder of the Ugandan blockchain startup Crypto Savannah told CoinDesk such platforms hardly represent a large population in the country that are unbanked and hungry for access to cryptocurrency. Since Binance Uganda opened, several other global exchanges have started contacting local regulators. Quote, "We've already heard of interest from other players that are looking at the Uganda market," he said. Meanwhile, he told CoinDesk that Binance Uganda is looking to hire local operational staff for both local and expansion of similar subsidiaries in 2019 to either Kenya, Nigeria, or South Africa. "Uganda is our pivot to reach out to other African markets," he said. Driving factors. Remittance is a crucial factor driving demand for Bitcoin in Uganda. A 2014 national consensus revealed nearly 10% of Ugandan households received remittance from neighboring Kenya, only a few percentage points below the most popular remittance sources in Europe, Sweden, and Japan. But these transfers can carry high conversion fees, creating demands for alternatives. Quote, "There's a lot of cost in the financial system when you switch the currencies back and forth, in addition to inflation. Other factors driving cryptocurrency adoption in Uganda are rampant unemployment beyond the agricultural industry and demand for imported products. There's a large consumer market for people purchasing cars, for example, because Bitcoin is legal tender in Japan, where the cars are manufactured. Meanwhile, the International Labor Office estimates in 2017 that almost 15% of working-age Ugandans were under 30 were unemployed, plus nearly 49% who were employed only had irregular or temporary work. As such, many are becoming self-employed. Unemployment is another real factor. It forces people to look outside of normal employment structures. This harkens to similar factors noted by cryptocurrency advocates in the Palestinian territories, where educated young people look for opportunities to learn, shop with, and trade crypto when white-collar jobs are scarce. On the other hand, there's still a long way to go until those 40,000 Binance Uganda users start to rely on Bitcoin for daily remittance. So guys, awesome news here. I love to hear stories like this where we're starting to see people who are in a less than ideal situation starting to get access to cryptocurrencies that are going to make their life a lot easier because of things like inflation and conversion fees and all that stuff that makes their life all the more hard. This is awesome because it will make it a lot easier when it comes to doing transactional purchases. So awesome for Binance, 40,000 crypto traders in its first week in Uganda. Next up, Bitcoin billionaires, Winklevoss twins sue Charlie Shrem. So I'm not going to read through this article. I'm just going to give my thoughts on this. So Charlie Shrem, for those of you who don't know, has been to jail before for selling Bitcoin to people who he knew was going to do illegal things with it. And depending where you stand on, I guess, political issues, you might be against that or not really care. He was arrested for that and even served some time in federal prison. And now the Winklevoss twins are coming out and saying that he stole Bitcoin from them. And basically, some people are believing them because they're saying that, well, Charlie Shrem has been buying a ton of properties lately, or I guess right after he got out of jail, he was buying a ton of properties, and they're like, where's he getting that money from, and all this other stuff. And then the federal government had ordered him to pay them a ton of money, so Charlie Shrem should be broke, and he's not. Now, that doesn't necessarily mean he ripped off the Bitcoin billionaire Winklevoss twins. It's a possibility. We need more data on this to really come to a conclusion, but let me know in the comments down below, whose side are you on? Are you on the side of the Winklevoss twins, the Bitcoin billionaires, or Charlie Shrem? Both, or all three people are very influential influencers in the cryptocurrency industry. Last up, we have the market today. Bit up. We have a $207 billion market cap level. Bitcoin dominance at 53.5%. Most of your top coins are up about 1% or 2%, with the exception of Bitcoin Cash up almost 10%. Go to the biggest changes today. We have Basic Attention token up 21%, almost 22%. Biggest loser today is Dropperl at 5% and Chainlink at 5%. Overall, I would say an up market. I wouldn't say sideways because we did see some more money come in. So I would say an upwards market. Hopefully we get out of this bear market soon and we could really see the wealth start to drip in this cryptocurrency industry. If you enjoyed this video and want to get $25 free Bitcoin, click the link in the description. Check it out. All you gotta do is sign up, get $25 free Bitcoin. I'll catch you guys next time. It's Naughty Investor. Hope you have a great day.